Ladies and gentlemen, welcome to the new Fintech Business Models session, moderated by Oliver Gajda, Founding Executive Director, European Crowdfunding Network, with the participation of Yorgos Platanas, Country Director, Greece, Seedblink, Eleni Vlami, Head of Growth, Pleo, Womenoffintech member, Alin Latu, Country Manager, Romania, iBanFirst, Christopher Grätz, Co-founder and CEO, Invesdor.
Thank you very much. Welcome and thank you for staying. We already were shortly introduced, so we can drop this. Maybe to just, we had a long day. There was a lot of super exciting discussions and panels, and now we close with new fintech business models. I thought everything we heard so far was new and was innovative and it was challenging. And if I look at my panel members, then I think this is not as new and it's maybe a little bit less innovative. But I think here we need to, just to frame the discussion that we want to hold here, is financial services are, around since a long time. And over the last 100 years, we've built regulatory systems that manage how we work with money, how money is transferred, how we can trust each other across borders. And this is, of course, a constantly changing world. And we see more changes in this world when we have financial difficulties. 99, 2000, we had a stock market crash, we had lack of capital across the world, and we saw policymakers try to innovate, not very innovatively, but they tried to adjust the system. And then we had a financial crisis in 2008, was mentioned earlier, and 3 weeks ago we had another banking crisis. And we've never gotten out of the recession that we had a few years ago, really, because there was COVID and there's the war. So policymakers, at least in Europe, in my experience for the last, since 2008 really, so that's 15 years, are extremely innovative. And so the discussion doesn't have to be about how can we get rid of banks or how can we change everything. It could be at this point in time about let's look at what they already have done in policymaking and how we can exploit value out of this and create business models on existing regulation. And so we have, for examples here, 3 different regulations that apply. One is brand new, but one has been adjusted as well. So we see that we are now in a market where I think the policymakers and regulators have enabled the market to take opportunities and to create value out of new rules. So with this, maybe you can introduce yourself really quickly, say what you're doing, and why you are so special and how you will become to rule the market. We have to start with you because Eleni is the only woman in the panel.
Yes, I can start. Hello, everybody. My name is Eleni Vlami, and I'm head of growth at Pleo. Pleo is a Danish fintech. We specialized in expense management solutions. So, company was founded in 2015 in Copenhagen. We have since then became the fastest unicorn in Denmark. Latest valuation for the company was $4.7 billion US. We have approximately 850 employees in 8 different locations, one of them being in London, where I'm based. And we have over 25,000 companies that are using Pleo in 16 different markets. So the core product is expense management solution. So what we currently do is we offer corporate credit cards to employees to use to buy things that they need for work, while at the same time we're allowing the finance teams to have full visibility and control of the expenses of the company. I won't go into detail for the product. We can discuss this in another time. So the reason why I'm here today is to discuss disruptive business models with the rest of you guys that fintechs like Pleo do for actually SMEs during this climate, this economic climate, but hopefully beyond. So really looking forward to the discussion, and thank you for having me.
Hello, everybody. My name is Alin Latu, and I represent iBanFirst. I am coming from Romania. iBanFirst is a Belgium company, actually French-Belgium, because the management is coming from Paris, previous Saxo Bank. And we specialize in cross-border payments. We do have a platform where SMEs can actually make payments and receive payments from all over the globe in more than 30 currencies. And yeah, that's pretty much it in a nutshell.
Yeah, hello everybody. Also, thank you for staying even after lunch. My name is Christopher. I am the CEO and co-founder of the Invesdor Group. We are one of the largest crowdfunding platforms in Europe. We were founded in 2014. I have a long history, like Oliver said. Maybe not the youngest company, but still very innovative. We have financed over 800 projects in Europe. We are based in Berlin, Amsterdam, Helsinki, and Vienna. So we focus a lot on the Nordic and Central European market. Have around about 170,000 users on the platform. Have transferred 450 million in funding to young startups where we finance equity, to later stage SMEs where we also go into the debt and bond market. And under our brand One Planet Crowd, we also fund renewable energy projects throughout Europe. And yeah, based on new regulation, we are capable of providing these services in all other European countries as well, out of one license, which makes this product grow and get even more innovative again.
Hello, and thank you very much for the invitation. I'm George Platanas, the country director of Seedblink in Greece and Cyprus. Happy to be here. If you don't know Seedblink, Seedblink is a crowd investing platform. We started in 2020 by supporting actually the European tech ecosystem, enabling angel investors to invest money on the side of a VC. Since 2020, we have more than 70,000 users who onboarded the platform and raised roughly 60 million euros supporting the European tech ecosystem, startup ecosystem. We started from Romania, Bucharest, and we have offices in Bulgaria, in Greece and Cyprus that I run, in the Benelux region, but also in the DACH region very recently. Now, a few numbers regarding Seedblink. Almost half of our investors have invested at least once in a startup, therefore 35,000 of them. And the largest portfolio value is close to 600,000 with 35 investments. And the average value of the portfolio is around 17,000, 18,000 euros. So this is in a nutshell, as you said, we too operate under the new European crowdfunding regulation. We are happy that this happened. There are a lot of things that need to change and adapt into making this more, let's say, helpful for startups to raise money. Thank you.
Okay, thank you very much. I mean, for the audience, please, if you have a question, I can't see much, there's a big light, but maybe raise your hand or shout anytime so that this becomes a discussion and not just a monologue from the stage to you. Let me go back to you now. I mean, thank you, it's nice introductions. It's always, you always make yourself look good, and the best, the biggest, and so on. We've heard this all morning. You hear this at every conference. But you have a client, right? I mean, all of you are SME facing. So there's an SME, there's 20 million SMEs in Europe, and they have problems. And they probably have more problems nowadays within our economic crisis than they would have had a few years ago. What makes you so special compared to not your direct competitors, but maybe the incumbent services that we see in the market? I mean, at least two of you operate under, let's say, a plain vanilla license that anyone else has. So what is the real value add that you bring to the SMEs, and therefore how can you enable economic growth for our economy? Yeah, we start always with you for now.
Sure, I can start. Yes, with as we said, Pleo has been around for 8 years now, and for us, of course, there is competition. So using or selling similar solutions with us. But of course, there's also the incumbent banks that are offering business solutions for SMEs. We have a few ways that we differentiate ourselves. Mainly is that we have real-time data, which in most countries this is not the case, especially in the UK where I'm based. We also, when it comes to expenses, we have a holistic overview of all the expenses of a company in one place. So we don't only have transactions, we have mileage, we have per diems, we have invoices, we have subscription, we have everything in one place for any finance team to basically control and see if besides paying an invoice and seeing an invoice, also how they can actually save money. We offer seamless integration with any accounting company that any other software that the companies are using during this journey, and this is helping them with, again, using Xero or QuickBooks or whatever else this company is using, where they don't have to log in and log out from the system. They can actually do it through the platform. We reduce errors, because we all know when you do expenses as an employee, everybody's losing receipts. Everybody's going to misplace some expense that they did, including myself today. For example, I'm traveling for work. If I have my Pleo card, I can actually have everything in place, and I don't have our CFO to call me at the end of the month and ask me where my Excel sheet is with my expenses for my trip to Thessaloniki. So at the same time, I'm actually allowing my CFO and the rest of the finance team to focus on doing something that actually matters instead of just chasing me every end of the month. So increase productivity, reduce errors, and I won't go into detail for the functionality because this is something that any competitor can do, but for us is at the same time that the fact that we have a solution that works can actually improve productivity, and the ROI always comes to the fact that there are less errors in the system.
Is your card cheaper than the competition?
After the COVID and economic crisis, we did adapt the pricing model, which was something that we had to change, because at the same time, Pleo is also an SME. So we are also customers of our own solution. So we did firsthand understand that we need to do something to fix this. One size doesn't fit all. So our pricing was the first thing that we had to adapt besides the product offering and portfolio.
Okay, thank you. Same question to you. I mean, you know, maybe also you're still growing, right? So you can explain a bit on the challenges there as well.
Indeed. So I'm actually responsible for Romania right now, but we do service more than 6,000 corporates at this point in Europe. And I think the two key features that do provide value for our clients and help us in customer acquisitions is, first of all, the platform. So the technology behind it provides clients with the possibility to take control of their financial operations, either if it's, I don't know, foreign exchange services where they can see in real time the currency cross that they can buy, I don't know, euro, dollar, or whatever currency they need. What would be the payment fee that they're being charged to send funds all over the globe? What is the interbank rate? So we do pride ourselves on the transparency that we provide with our clients. And all other kind of cool features, but on top of this, I think it's the human touch. You know, all the clients that we work with do get a dedicated account manager, and I think this changes a lot of things compared to neobanks, for example. I think, you know, up until now we were positioning ourselves a little bit more as a SaaS, and we were selling the technology behind it. And I think lately we've switched this towards SaaS with a human touch, because we saw that having people on the ground and having people communicate with clients brings so much value. And, you know, we try to understand the business. We try to proactively come to clients with tailor-made, I don't know, hedging solutions. And most importantly, we try to educate the market, because this is the biggest issue we have encountered so far. It's especially in Eastern Europe. I think Western Europe is more developed, but Eastern Europe is still, you know, quite new to fintechs. Although Revolut had tremendous success, fintechs are still, you know, have to push to educate the market, explain the segment, explain the added value, and, you know, once the information is there, I think SMEs do see the additional benefits.
Also, to you, what is the pricing? I mean, if I would want to open an account with you, not that I'd have the amount of transactions for our business, but I mean, is it, you know, what is the trade-off there for the SME to go with your service?
It's a couple of things. It's not only pricing. Of course, pricing is very important. You know, we do not have a lot of branches. It's only one branch per country or 2 branches. We don't have thousands of employees. We have a couple of tens of people in every market. So of course, we do have a very low cost structure, which allows us to provide competitive pricing to clients. But it's not only that, you know, it's the reliability, because when you talk about money, it's very important funds to move very fast and to arrive to beneficiary very swiftly. We do provide transparency on the payment process, meaning clients can trace in real time how their funds move from the moment it leaves their account with iBanFirst until they reach the beneficiary. And yeah, all in all, it's a cumulus. You know, it's not only one thing. I think pricing it's on the bottom of the list.
So in both your cases, you streamline the kind of administration end of the SME, where they basically you take over some of the work that they otherwise would have to do, you know, by copying and so on and so forth. If you would put, or I don't know if you speak with your clients about this, what can they put an economic value to this? Can they say, you know, you mentioned we give them the time to do. Is this like half a secretary or half an assistant a year that we save if we work with you?
Yes, we actually have an ROI calculator online that they can actually, any company that is looking for an expense management solution, they can add the time, give or take, that they spend per day or per month in managing expenses, and they can give them exactly how much money they're going to save for this. We also have other practical things. For example, we launched cashback. So this is where also the cost comes in. What I mean with cashback is that from November last year, if you are a company that is using Pleo, the more you use the MasterCard card from Pleo to do transactions, the more you get back as a cashback. Of course, there is a cap, and the cap has to do with a subscription fee that every company is paying to use Pleo. But it's up to every company to actually manage this cashback, and they get they can actually get the whole benefit of using the platform, but at the same time for free, because they will get this as amount as cashback and credit at the end of the month. So we have more practical ways to help them, especially nowadays. We also have packages for zero FX. We're trying to grow with our companies that they are actually having entities abroad and using the card abroad. So there are, again, small pieces of the functionality that can add more value when it comes to cost that we are here to help. Because if they grow, we grow with them. So we're trying to help them as much as possible. Again, coming from a company that is using Pleo ourselves.
Actually, if they grow, we grow. Actually, this is something we do tell to our clients as well. For the FX industry, it's a little bit different. 93% of the FX transactions are still done by banks, and 7% is done by fintechs. You know, so there's so much to be taken from banks. With regards to cost saving, I think it's an interesting thing, you know, because what we have identified is that there is no linearity with regards to pricing for SMEs. You can find companies, I don't know, buying $1 million per year, and they have very low margins, and you can find companies doing 100 million a year, and they have very high margins. So, you know, it's on a case-by-case basis, but, you know, that's what we do. Normally, we analyze on a yearly basis, and then we just communicate to the client how big the savings would be.
Okay, thank you. To you two, you're in a slightly different business model, because you're not providing additional services as such. You help them raise funds. So maybe you can, you know, that's a market we all know that doesn't exist. Yeah? I mean, early stage access to finance is really difficult in Europe. In some countries, we have high subsidies with the government. In Germany, and banks don't provide access to finance. So SMEs are now very hard loans and equity not at all. So how do you enter this market, and how do you position yourself as one of the solutions for the future?
I think the general idea, we had that in the opening remarks this morning, is that we don't see fintech as an alternative necessarily for the classical banking industry. So we understand ourselves as a new part of the financing structure of a company. So the main advantages I think that we can offer is that we can start with a company very, very early, because we have equity products in place. We can help them, you know, attract new markets, help them attract their own customers to become investors and get more sticky and more based on the product basically. But we can also follow up at the later stage. So as soon as a company reaches the stage where they don't want to dilute anymore, and they would classically go to that's the bridge I think we built, because they normally would then start going to the banking industry and realize that for the banking industry they're maybe a bit too early stage. But we obviously have the data, we have the experience with the company coming from the equity side, so we can move them over through subordinated products into the classical senior banking industry. So we have all these products in place. I think the main advantage that we offer is we don't want you to leave your bank behind. We are an add-on in the financing mix. And secondly, we can go cross-border. We can be along the life cycle, and by that make it possible that also, companies that are maybe a bit harder to explain but have a strong customer base can finance themselves.
What we've seen the last, let's say, 2 quarters is that economic recession, banged on the door, and a lot of the VCs that were initially funding just them, the startups that we also fund, is that they hold back in the full scale of investment. So instead of the VCs doing a full round, let's say $1 million round, they try to minimize their risk and their position, and therefore they do smaller rounds. That leaves a market there which is underserved. And this is where Seedblink comes, and we top up the rounds. We help startups actually, so there is a USP for the startups there, because we top up the rounds and we help actually great teams perform and achieve their business plans as they planned it, and also thrive. And there is also the investor side, right? And there are quite a few things and offerings there on the investor side. The European crowdfunding regulation license that we got provides, safety to our investors and clarity and transparency. But we also give the ability for the investors to access deals that they didn't have access to. So our investors actually have the chance to invest into a startup the same with the same terms as an LP from a VC does. They get to choose their startup, they get to choose the amount that they're going to invest, and more important is that we provide liquidity through the secondary market. So economic recession is one thing, but the ability to have access to your money whenever you need them and liquidate part of your portfolio or your full portfolio is there, and that also gives you the safety that you invest in something, and tomorrow morning you can say, I need the money, or I need to invest in somewhere else. Then we are here to liquidate that. And having a big network of investors like you have as well allows these transactions to take place and to be on a daily basis.
So I don't know about your model, but your 3 models, you basically benefit from the innovation on the regulatory side. The PSD2, the Commission made it easier, enabled fintechs to take advantage of this ECSPR. They cut out parts of capital markets to give to a new market. And this sounds good, but we are in a recession or in a kind of difficult environment. We already heard banks are pulling back. We now hear VCs are no longer VCs because VCs invest anti-cyclical. So if they don't invest now, then they didn't raise enough money in the past. So how does your business model look when the economy really goes well? Why shouldn't banks or credit card companies provide your services? Why shouldn't they say that is a nice value add? How will your business compare when banks start handing out cash again? How will your business go when VCs are flush of money and want to invest? Will you be able to continue your growth, or will you then, is there an end to this path for you, or that is really kind of the long-term view of your business in changing economic situations?
May I take this one? Yeah. So we will continue to grow, and the reason for that is that we give to startups and to investors things that normal banks and VCs, they don't. Through the network of investors, you understand that there are people, C-level execs, people who have industry experience, And therefore, this is what we call smart money. VCs might have that, but not in such a great, let's say, numbers of investors. So what we give back to the startups is the ability to not only raise money, but raise smart money, and therefore have someone in their advisory board or an investor that is helping the startup closing a deal or the pipeline or whatever that is. And that doesn't come from conventional financing. It has to come from VCs or crowdfunding platforms. Crowdfunding platforms also give, when you promote a deal, you actually put marketing effort there, and people get to know about the deals. So this is another thing that you don't get from the banks. The bank is not going to go out there and say, hey, I lended you €1 million. But when you're raising from crowdfunding, people who invested in you, but also all the marketing efforts, they are focused toward that.
On our side, on the last 3 months, during the last 3 months, I think we have seen the number of companies that have onboarded with us increase substantially compared to 2022. And we do notice that companies are more willing to look at cost-saving solutions compared to, 2020, 2021, and everybody was on a rocket. But, for us, what's important is the product. The product has to always be in line with the market, first of all, and in line with what the client needs. So as long as we keep on building the product with the needs of the client, at heart, I think, there's really nothing that will not help us continue our growth. And with regards to the regulation, of course, PSD2 has been a blessing since 2017. We've managed to launch 6 offices in 1 year, which normally would have been much more difficult. But there's also local regulations, and I think we tend to forget about those. For us, 2022 was a lesson from this perspective because we wanted to expand geographically a lot. So we launched 6 new markets in South and East Europe. And as we started to build up the processes, we realized that all regulators actually have different processes locally. So it took us lots of resources and time to actually adapt our processes in order to be in line with local compliance. So I think it's important not to forget about this side of the things.
And I would like to add that if we look into crowdfunding and into different market scenarios, it's a two-sided business model, right? So in every market scenario, there's either the company having more demand or the investor having more demand. So I think it brings you to a quite stable growth rate, actually, that you can have. Again, we are an add-on product, or we are an additional product for the market, and you mentioned regulation making the product possible. I think what will really scale this growth is the understanding that crowdfunding is a term that is used now since 10 years. I think with this new regulation kicking in, we are at the forefront of the capital markets union. I think this is what we need to compare to, not only to banks, but also to how's a company back in the days or today doing an IPO? How do you go public, and how will you go public in the future? How can you make products more tradable? We heard about tokenization, etc. So I think us as an investment platform now being defined as crowdfunding is more like a classical capital market product. And I think the real success in this will come when we bring together the power of crowd and retail investors, also with institutional financing, and see how, and that's why an event like this today is highly interesting for us to see how can we be the channel to SMEs and to startup companies that also, we all focus on sustainability quite a bit, that also build the future business models that we need to change something in the market. So I think, again, we are not dependent on economic cycles. We are dependent on working together with the classical financial industry and with the institutional money to bring the power of the crowd to make the change that needs to happen.
Just to sidestep the discussion there, the whole morning was about digital finance. We talked about a lot of this, and that's a market that is still in uproar. There's hardly any regulation. It's coming now. The actors will face this and will have to be compliant and may have to give up, but there's also a lot of value in these things. What do you, for your business, what do you see when you look at digital finance, be it tokenization or other aspects? do they affect your business? Is this an opportunity for you to, move into that market, or how do you benefit in the midterm of what is happening right now, with this kind of technical innovation that's happening there?
Maybe I can hand off the microphone. For us, we do digital financing already today. So since 2019, the products that we structure, a lot of the debt products that we structure, at least under German law, are tokenized, blockchain-based. So the next step for us that needs to happen is the ECSPR gives us the possibility to build something like a bulletin board where people can trade. But the next step is definitely to go into the DLT pilot regime and to see where's this marketplace going. So I think everything we heard about tokenization, if you had as a crowdfunding platform not already on this, then I think you're getting quite late, because we are in the end just an investment platform bringing two sides together. And of course, every digital step that happens, every product innovation that happens is something we take in and use. Might it be payments, like we obviously also for our clients to make a payment as efficient as possible, something we do. So all these digital trends we use for ourselves quite a bit, and again, do that already since 2019, and try to be always on the forefront there.
I agree. Similarly with us in Pleo, anything that has to do with digitalization is always a blessing for us, and it's always something that we take in and use as much as we can, because this is the core of the product. So anything that has to do with the industry going in that forth is for us the same. I mean, again, going back to the question about recession now and maybe the situation is going to get better or worse, we all need to adapt, right? And we all need to make sure that we are aligned. For us in Pleo, last year was massive growth. We opened 10 more countries. We added 12,000 more customers in portfolio. But now we need to take, if not a step back, probably a step like in parallel, where we just need to make sure that the roadmap is there, the product is there. When you grow that massively, you at the same time need to make sure that you align with everything that is around when it comes to other solutions. But you need to make sure that your product can actually be localized in these 10, 16, 20 markets that you have present. So if regulation can help, we're more than welcome to have this. If they don't, we will make our way around this and find a solution to basically progress and deliver a solution that helps our customers.
Does the audience have any questions at this point or later? No? No, they don't. Let me ask you some specific individual questions, because you all have completely different business models, some similarities, but different regulation, different markets, different clients, and you could all actually cooperate to a certain degree. His customers could be your customers. But so maybe I start with you, George. Thanks. Just to you mentioned it already. So you come out of private placement. You managed high net worth individuals, people that had success, that have too much money, and as a hobby start investing in business. And that is traditionally very private business. Probably still today. I mean, for everyone here, venture capital 20 years ago was private. Yeah, they didn't have websites at the time. This is where the name private equity resonates in. So you have a market that is, self-assured, flush with money, but does things amongst themselves. Now we have an ECSPR license. An ECSPR license is basically a regulation that the European lawmakers have allowed to be created. It's a public offering. Think of a stock exchange for transactions under 5 million euros. That is basically what ECSPR is. That is crowdfunding. Every transaction that is public, managed through a platform in Europe for loans or for investments into business, runs through this license. Also, crypto or digital securities, at least where we have regulatory compliance and member states agree that everything that's crypto but looks like a security, then it's a security. So we have a very different market now. You're in a public market. Everything is transparent.
Correct.
How do your customers deal with this? How do you deal with this? It's potentially a very different sector you're moving into.
Actually, it is not. Back then, we were still doing private but also public campaigns. And the private campaigns actually start from the startup, not from the investor side. So if a startup doesn't want to have like public information to everyone available, then it chooses to go on a private round. But the information are there. So for our investors, the only thing that changes is which investors actually have access to the deal, right? With the new ECSPR, I mean, we didn't have to do much alignment because the company Seedblink, since the beginning, we not only respected the law, but there was a draft of the law, okay? And we started operating with this in mind. So everything was built from the ground up with this mentality. So the changes within the company are minimal. Yes, of course, there is transparency. There are a lot of things that we need to comply and pay extra attention. But when it comes to managing everything, it's not much of a difference from the old model to the new one. Now, again, we had public campaigns before. We continue having public campaigns, and we will continue. And the private events, as you said, is only private because the startup needs, not because some elite investors decide that, hey, let's bring this deal and we can share the profits and stuff like this. It's the other way around. So it depends on the startup what kind of investors they want to attract.
Thank you. Christopher, you are quite unique in this market. You are the result of a merger of 4 companies over 3 years. For small startups, M&A activity is maybe already quite new. So that, I'm sure, brings a lot of interesting challenges, baggage that you need to get rid of, and at the same time operating in 4 markets with teams. We heard already national regulation, local regulation that probably opens up yet another can. What would you say? What is your view on this? How do you move on? How do you solve this? And what's the solution for a pan-European business in 27 markets?
Yeah, it's true. I mean, we have this history of merging and following a buy and build strategy. I think we're quite focused on that, and we have the knowledge and the experience within the team. So it doesn't add a lot of problems. We are happy Pleo user due to that fact because it really helps us, managing our expenses throughout different countries. I think what we see, we are a proof point that the license that we have right now allows us to do, as you said, crowdfunding services up to 5 million euros. But it doesn't end there. So there are a lot of other topics that are involved. We need payment service providers that are part of our business model. There's the whole identity bit that we had this morning, KYC, where coming from Germany, KYC is differently regulated than in other countries. We have video identification, others have EIDs, the next ones, just provide some documentation from their bank or something. So I think what we really understand is that the license that is given to us is the idea of Europe to build a capital market union, to build a balance to the banking industry and to not come into the risk of that we saw 2007, 2008, that a potential failing of the classical industry might have a big and huge economic impact. I think what we all need to understand, and we will take our part in this, is that this was just the first step. And the next step that needs to happen is, like I said, a DLT pilot regime, making these products tradable. Understanding how can we find standards on other topics than crowdfunding? How can we find standards on KYC and on payment provision, etc.? So I think we are maybe the first ones making that experience, as we are already quite active in 4 countries and see the national regulations still limiting us at certain points. So yeah, I think this is what needs to be understood, and we are very happy to help and bring experience and to build this together.
Very good. So one customer, and you're not a customer yet for iBanFirst, but that could come as well. Because you're a payment service provider, but you also operate together with banks. So you have an open banking protocol, and you need the services to roll out your business into more countries, if I understand this right. So you are reliant on a third party, may not be a different regulation. How do you how do you expand your market, across Europe in 10 member states as a client? What does it take there? There must be challenges that go beyond what you can do today, and that need to be addressed maybe in a similar way as Christopher said, where we need to build an overall ecosystem.
Indeed. So what we do is we do leverage big banks with regards to our infrastructure, either if it's for liquidity, either if it's for infrastructure. So at the core, we still are using banks. Our main partners are Citibank and ING. We're quite transparent about that. Then, with regards to expansion, I think this is when issues occur. Actually, when you stay within the Eurozone, things are quite easy, and that's why at this point we're actually in a position where we can service Greek clients. But it took us mainly 1 year to develop the solution to service Romanian, Hungarian, Bulgarian, Polish, and Czech clients. Once you go outside the Eurozone, there's more complications. You have local payment channels, you have local currencies, you have different kind of standards and market expectations that client expect from you. And yeah, I mean, that is a challenge. As Eleni was saying, back in 2022, the roadmap was looking, full of ideas. And after 6 months, that's what we did. We understood we had to pivot, we had to look back. We had to level our offering across all markets. So we said, okay, maybe we take a step back. Maybe instead of opening again in 2023, 3-4 markets, we put it on a hold and we develop more into the markets that we already have opened. And so far, it seemed to work. I think there's so much to be done yet. I think we're still in the early stages, although, you were saying earlier that it's old technology. Okay, maybe it is old technology, but for 4 or 5 years, but the potential is still so much there. And as I was saying before, it's 93% of transactions being done by banks. It is insane. So we feel quite comfortable that if we do follow the roadmap we have ahead, 2 years of developing the markets, the existing markets, and then again adding 4 or 5 additional markets. Within 4 years, we're going to capture, and we can actually be the #1 player in the payment segment in Europe.
Okay, thank you. Good luck. Eleni, and how is that for Pleo? Because unlike the 3 here, you don't have your own license, so you piggyback on a license that makes it probably much easier on many levels. Also could add some other headaches. How do you see your expansion there, and then the potential exit into independence, or is that even a possibility in your market?
For us, the strategy in Pleo has been from the beginning around partnerships. So yes, we work with MasterCard. They are the provider of the credit corporate cards. We, at the same time, work with JP Morgan and Danske Bank because they are providing the open APIs for the real-time data and the payments. We have similar partnerships with open banking providers, for example, but it doesn't have to do with a license because actually we are one of the few expense management solutions in Europe that are licensed. So every transaction that our customers are doing is going through a licensed entity, which is Pleo Financial Services. And we are licensed by FCA, both in Denmark and in London. So for us, it has to do with a collaboration. We would never go or try to be direct competitors with our partners. We want to work with them. We want to collaborate with them. This is how we scaled that fast. This is how we progressed that fast. We tend to do things faster, better, and more productive. And the way to do this in the fintech industry is with collaborating with others. Another example with the open banking providers, when we enter a new market, we don't do aggregation ourselves. We don't build aggregators in-house because there is somebody else in the market that we are entering that does this and does this way better than us. So we take this opportunity to work with them and collaborate with them further. And this is, again, how we see us scaling. And it has been successful for the last 8 years. And we will continue doing that in a matter of Pleo being part of an ecosystem of partners.
We have to come slowly to an end. please, if you have questions, raise them. There's a point here that I don't know if you noted, but you all talk about partnerships, even with banks, and so it's an ecosystem. And our opening keynote, the chatbot, clearly stated and is closing that fintech is not against the banks; it is in cooperation. And at the same time, regulation tries to be technology agnostic. So it's not about a specific tech that's being regulated. So if we go back to what we heard earlier, the digital innovations that are happening on the technical side, and you look at your business, which uses it, but you're not relying on it. For your individual business where you're right now, is it more important to have a partnership with a financial institution, be it for liquidity, be it for access to market, be it for other support, or is it more important to have the latest set of technology that maybe also helps you to operate faster if you would have to make a decision between this?
I think it's both. Of course, it has to do with the vision and the strategy, but both are needed. Depending on where you're focusing more, for us, it would be, I would choose both.
I mean, if I can choose both, I also take both. But if you if you say I have to take a decision, I would say, based on our business model, technology is more important because we have our own license. We're not dependent on any partnerships that we're in. However, obviously, an ecosystem makes you scale faster.
Yeah, I mean, you have to choose. I mean, I didn't want to bring up Brexit. You did that, but you have to choose. Yes.
Likewise, for Seedblink is both actually the answer. We do rely on our technology, but at the same time, the validity on the deals that institutional investors bring actually give a peace of mind to our investors. So it's a model that has to be symbiotic, I would say.
I guess it's always a cost efficiency kind of deal. As Eleni said, I think in the end, once you try to do everything, you're not going to do everything well. So if there's players already in the market who are doing this already, they're doing it quite well, they do have the experience, we will always try to partnership. Ideally, we would develop all our tech in-house, but we did understand over the last 2 years as we've tried to scale up at a much faster pace that using partnerships, it makes it much more easier.
Thank you very much from my end. I mean, if you have a last word, a last wish you want to, ask to the EIB that is somewhere here hidden, or policymakers, something that makes the market grow, or to the rest of the market, what we need to, make fintech more of an actual ecosystem than it already is, and have maybe in 10 years, when Piotr comes here as a guest of honor, that we can say, banks do 60% of the transactions, but fintechs do the other 40. I mean, that needs to be the goal, right? That we reach these kind of things. Is there anything that you would?
I have.
Yeah.
Okay, so for any policymakers in the room, I have to say one thing. You have to understand that crowdfunding platforms, they are not allowed to auto-finance themselves. Okay, and these models are, they're not traditional models that VCs are looking for. Therefore, financing for us is tricky. And at the end of the day, we're still an SME, and we have a runaway, and we need to actually raise money. And I have to admit that in the UK, the crowdfunding platforms actually can auto-finance themselves throughout their networks, and this gives them a competitive advantage, an edge that we don't have. And what I would ask for any regulators in the room is, consider that we do have the networks. It will help us a lot to actually be able to auto-finance ourselves.
I mean, that was it's a political discussion. I think it's not up for discussion, but maybe Christopher has an answer to that.
No answer to that point. I think, like I said before, I think I would like to underline that we need to think big, and that includes that is an ecosystem that includes policymakers, that includes startups. We can also not sit here and only think we are this one specific fintech doing this one specific thing. And also regulation needs to be aimed at, in the end, to understand how can we put regulation together to build something, right? And that's how we understand us. We want to build a capital market union that gives all companies, everyone that wants to drive sustainability forward, that wants to change the issues that we all confronted with currently. And for that, we need a capital market. We cannot be reliant on classical financial intermediaries and players. And I think as long let's get together. Let's bring institutional and retail money together. Let's find out how regulation can be built in a way that we can depend on each other and work together with each other. And that's also together with banks, but also as fintechs together, not understand us as competition in a way, but rather as we all tackling the same issue and following the same goal.
On the payment service providers side of things, I think what we do need is more access to data. I think the decisions we're actually taking nowadays are mainly based on only the data we have on hand or the data we pay consultants to get. So it's becoming not extremely easy to develop new tools and new products, especially as you guys were saying, when you're in the growth stage, you have to be very careful on how you allocate the capital to new tools and new products. So I think regulations with regards to data sharing between financial institutions should definitely be something to be considered for the short term.
For me, one thing that I would wish, hopefully, to change when it comes to the regulation and fintechs, and specifically with PSD2, which is one of the regulations that is affecting companies like Pleo a lot, would be that hopefully the next iteration, the PSD2, the PSD3 that we would have in a few years' time, is that they can actually help with the fragmentation we have in Europe. We still, up to today, we're talking about regulation, and Europe is so fragmented when it comes to API standardization, for example, that it's painful to watch. At some point, hopefully the next iteration and the next initiative would be better with that. Help with some standardization in API for all of us to be faster and working together. And hopefully the open data can actually be open up in more sectors than just finance. So that would be my two takes, or my two wishes at least.
Thank you very much. If you have any questions now, you have to ask them in the break later on. And we hand over to Piotr.